Hello, everybody. This is Claudio for Growth.Lat, and today we're going to give you a list of 6 fintech companies that will go public in 2021. Number 1 on the list is Coinbase. Coinbase is the largest digital asset exchange in the US. They claim over 35 million users, booking in more than 320 billion in trading volume. Current assets on this platform might top $25 billion. The digital asset exchange operates around the world, serving retail and institutional customers. It was founded by their current CEO, Brian Armstrong, and Fred Urson. Coinbase was launched in 2012, and it has been able to navigate a dicey regulatory environment in a fast-growing industry that continues to experience compliance challenges, including a recently proposed rule by FinCEN that may stifle sector growth if it is enacted as it's currently described. Next on the list, we have Sofi, social finance. They have long been rumored to be considering going public. Last spring in 2020, they raised a whopping $850 million in an equity offering. In 2020, also, Sofi entered the Asian market with the acquisition of 8 securities in Hong Kong. The acquisition was followed by another purchase when they acquired Galileo Financial Technologies for $1.2 billion in cash and stock. Early December 2020, Reuters reported that Sofi was considering a public listing via a SPAC, which is considered to be a more streamlined, less costly path to trading shares on an exchange. Now, while Sofi started as a student loan refinancing fintech, today they are more like a neobank, and they may become a chartered digital bank if things go as anticipated. Number 3 on the list, Robinhood. Robinhood has emerged as a digital investment platform that introduced securities tradings to a new generation of investors. Its unique way of interacting with account holders and no-fee trades generated a big growth, while rattling the cage of some incumbent digital brokers. Now, while their path to a possible IPO has not been without challenges, for example, they had to pay a $65 million fine to the SEC, and they received a complaint by the state of Massachusetts. But still, any public offering should capture a lot of interest from platform users. Chatter places Robinhood's evaluation at around $20 billion. Not too long ago, Robinhood also added cash management to its portfolio of offerings and quickly signed up 1.5 million plus users. And as it was reported last month, Goldman Sachs is said to be working on a public offering right now. Number 4 on the list, Stripe. Stripe is the digital payments platform that everyone uses. Millions and millions of companies in 120 different countries use the Stripe platform to process purchases and more. In December 2020, they announced the launch of Stripe Treasury, which was a service that offered users APIs to embed financial services, enabling their customers to easily send, receive, and store funds. Stripe is going from a payments platform to a banking as a service platform that already has the trust of its users. They are fulfilling a truism that fintech is becoming ubiquitous. Reports indicate that this fintech may earn 100 billion valuation or more. Number 5 on the list, we have Ant Group, which was created by Alibaba, and they were inches away from listing its shares in Asia when Chinese officials forced them to stop. Reportedly, Alibaba founder Jack Ma crossed the line in criticizing Chinese regulators, and now the company is being forced to moderate its ambitions and focus more on its original payment services. The whole situation remains unknown, and Ma has not appeared recently in public, which generated more questions than answers. Ant Group was one of the most anticipated IPOs of 2020, and it's hard to envision officials not allowing an offering at any point in 2021. Now, a little bit of side news. According to Reuters, Ant Group CEO Simon Hu has stepped down from his role and will be replaced by their executive chairman, Eric Jing. The financial technology said this Friday, March 3rd, 2021. The Ant Group board of directors has accepted Mr. Simon Hu's resignation request due to personal reasons, it was said in a statement. Hu's exit from the company comes as Ant is working on plans to shift to a financial holding company structure, following intense regulatory pressure to subject them to rules and capital requirements similar to those for banks. And now, last but not least on our list, Payoneer. Payments provider Payoneer has agreed to become a public company through a merger with a blank check company called FTAC Olympus Acquisition Corp, as it was reported by Bloomberg. The deal values the e-commerce heavy hitter Payoneer at $3.3 billion. Payoneer is a payment service provider for companies such as Airbnb and Amazon, is reportedly profitable, and they expect to pull in $432 million in revenue this year. The company processed more than $44 billion in payments last year in 2020. Some investors in Payoneer include Viola Ventures, Ping An, Greylock Partners, TCV, and Wellington Management Companies. The company works in over 200 nations and territories. It was founded by Yuval Tal in Israel, and it's currently headed by the CEO, Scott Gaylett. FTAC raised approximately $755 million in an initial public offering in August of last year. They have a SPAC that was formed to go on the hunt to buy an existing company or companies. And there have been discussions to bring in new investments to help with the Payoneer deal. This transaction also includes a $300 million PIPE, which is a private investment in public equity. Thank you for watching, guys. This was Claudio for Growth.Lat. Hope to see you again. Bye-bye.